wanted to share a quick little presentation I did with some of the team the other day, because I understand that feelings amongst our young staff and a lot of the clients and people we've been talking to has been a bit flat because of what's been going on in the economy. People were locked up at home, so people are starting to feel, well, they're feeling quite flat about everything. So I want to help you understand what I'm lucky to have is a mindset of positivity and growth and opportunity. And I want to go over some of the things that I know that suck at the moment and why I think it's actually good or even potentially awesome that they suck at the moment, because I can see the other side of it. So at the moment, for businesses and for investors, there's a lot of competition and costs are going up. So costs are going up for marketing, costs are going up for building supplies, costs are going up for everything. And this can suck in the moment. There's new debt to income ratios coming in, which means maybe you used to be able to borrow, say, $1 million, and now you might only be able to borrow $800,000. And the test rates that the banks are using for servicing about calculations on borrowing power, they're going up, so it's pushing your borrowing power down. That's pretty much impacting everyone. Confidence in the business, in the economy, and for individual businesses, confidence for property investors is dipping. That's because there's so much uncertainty, because of what's been going on in the last 10-15 years. There's a cycle in confidence, and it's definitely getting to a dip if it hasn't already. Inflation is kicking in. We're seeing a lot of news bites about inflation being at record highs. Over 6% in America, and potentially over 6% in New Zealand. The thing with inflation is the way they track it is they track previous quarters using data that might take a little while to come through. So if you see inflation is 6%, actually that's the data from beforehand. So the real inflation rate that we have on this day today might actually be higher. Like I talked about before, there's potentially a bubble in the property market at the moment, so it's quite easy to get down about that. You might own properties, had good gains there, but you might not be that motivated to buy a property because you think they're overpriced. What sucks at the moment is the COVID situation, a lot of fatigue about being at home. I can understand why that's getting to people. And the social, political, and legal environment definitely is not helping business owners, not helping investors. Though socially, there's way more people getting assistance from the government than there ever has been in the past. Politically, the government rule changes are definitely working against employers, against investors, making it more expensive, more difficult to operate the way that you probably would want to. So why is all of this negative stuff actually really good, and why do I even see that it's awesome? Well, when competition and costs go up, what you're forced to do as a business owner or an investor is to focus more on value, the value of what you're getting and what you're giving. So if it's harder to attract clients, you have to give more value than you used to attract those same clients, and that's going to be a better thing for the client, and it's going to mean that some businesses don't make it because they don't offer the same value. The debt to income ratios and test rates going up. Now, if you're an investor that can't borrow as much as you want to, what it's going to force you to do is focus on your income and on properties that you actually can afford. So in a way, what they're trying to do is protect you from yourself, from over leveraging. There's not much you can do about it. You can joint venture, you can try and find ways to increase your income, but you really are going to have to double down on the options that you've got, and you might need to go out regionally for your investing. The confidence side of things, what is going to happen is if you're a contrarian investor or business owner, then what you're going to do is you're going to spot opportunities when everybody else is scared. Then you're going to be greedy, and vice versa. I believe that when everybody is feeling like it's a terrible time to buy, that's probably the best time. So read up about contrarian investing, and I think you'll be pleasantly surprised. Inflation, why I don't mind inflation is it erodes the proportional impact of your debt. So if you have $1 million of debt on a $2 million portfolio, and the inflationary environment pushes that property up to $3 million in value, then your debt doesn't go up. So you used to have 50% gearing, now you got 33% gearing. There's a lot of complicated stuff, but the feel-good factor is definitely there when your proportional debt has gone down without too much effort from yourself. Property bubble, this is a big one. If you look back to 2008, 2009, even when New Zealand was hit with some decreases in property values, it didn't really last more than, say, 90 days. And if you look back over the last 10 years of what's happened, you'll see that property values climb significantly. So property bubble, don't focus too much on it. Think about your 20-year horizon. If you don't have 20 years, maybe 5 to 10 year horizon. As long as you're comfortable that property prices will be more than they are today in 5, 10, 20 years, it's never going to be a bad time to buy as long as you don't overpay. The COVID side of things, it will be over eventually. I was reading about the pandemic influenza 100 plus years ago. These things come and go, and you just got to get on with things. Can feel like they're going to drag on for years and years and years. It's going to be lingering effects, but we will be back into the swing of things eventually. And that takes me to probably the most important part is, even though we've got a lot more reliance on the government in terms of financially speaking, taxing the rich and giving to the poor, that's inherently not a bad thing, but it can be overdone. And you've got to remember that even though the rules and regulations and social environment is working against, say, investors at the moment, politically, we will probably see swings in the not too distant future. There's a lot of love lost for the current government. Maybe some of that's not their fault, but it doesn't matter. The circumstances might push new parties into power, and they might end up reversing a lot of the negative impacts that you're seeing in that space. So if you can try put a positive spin on the situation and keep that growth mindset, it's always going to be a good time to invest if you stay motivated and focus on finding the right deal.